Welcome everyone to the latest MGAA webinar. This particular topic is a little bit different from what we've been showing recently, which has been more kind of COVID-19 related regarding support for businesses, insurance implications and the like. A bit more of an international feel with this one. This one is based on MGA business opportunities in the MEASA region post-COVID-19. And we will hear from a couple of presenters later on today. Ali, if you could just nip to the next slide, please. Thank you. So with all our webinars, it's just worth going through a few kind of housekeeping points. All participants are automatically muted and will be kept muted throughout the presentation. This is purely just to keep background noise down to a minimum so everyone can hear the presenters clearly. We'd like this to be an interactive webinar. There'll be a Q&A session at the end. And in order to ask a question, you can do this by clicking on the chat function. If you just wiggle your mouse, a toolbar will come up onto the right-hand side and you can write a question to myself and I will raise that to either the presenters at the end. Just for clarification, the webinar is being recorded. We will not share any private data. However, the recording will be added to the MGA website for other people to use and will be shared with our hosts today as well. Finally, feedback forms will be sent out following this webinar, and that's just so we can learn on what went well, what we can improve on, and just get a general feeling of how participants reacted to the actual webinar. So please look out for that as well. Just nip to the next slide, please, Ali. Thank you. So we have two speakers today. Firstly, we have Ali Hassan, who is Senior Representative for the Dubai International Financial Centre Authority in Europe and North America. In his current role, Ali supports the CEO in developing and promoting the insurance, banks and capital markets and wealth management sectors, and is responsible for promoting and spreading awareness of the DIFC's competitiveness and positioning. We also have Nicholas Hales, who's a good friend of the MGAA, who has over 35 years experience in the London insurance sector, and he will be offering his own personal opinions and thoughts on the DIFC and Dubai. So before I pass over to Ali, we thought it would be a good idea to do a few poll questions just to get people's understanding of the DIFC and the MEASA region. So I'm just going to launch a quick poll. And I'll just ask you to answer those three questions. I'll just launch that now. So if you can have a look on the screen, so you should see three questions. So the first being, do you have existing business from MEASA region, either understanding risks or other services? If you can just click yes or no. Are you familiar with the Dubai International Financial Centre? Again, just a yes or no. And then third question, what developments in MEASA markets would you like to see? The options being pricing, regulatory, market depth, or cross-border activity. We'll just give it another few seconds for people to answer, and then I will pass over to Ali, who can analyse the results. So I'll just now pass over to Ali, who will begin his presentation. Ali.
Thank you, Ben. And thank you everyone for joining. Thanks to MGAA for hosting us, albeit digitally. Perhaps the next time we can do it in person. Just to recap the learning objectives of this session, so that you have that clearly for any applicable CPD. We're going to look at some of the macroeconomic factors that have been driving the development of insurance in the MEASA region. Then we're going to look at some of the current insurance trends and emerging opportunities in the GCC. And then we'll cover off the legal and regulatory landscape in the DIFC, and in particular how MGA business models can operate in the jurisdiction. I didn't actually see the results of the polls, Ben, but I guess we have that. Okay, so to look at the macro or the longer term economic picture, the region, the MEASA region, has for a number of years, in fact decades, provided above average growth when looking across at different geographies. Obviously, we have the COVID disruption currently, but I think that the fundamentals that have driven that economic growth remain valid. And we can see those, if I describe those to you, in the GCC, for example, you have economies that have been diversifying. I think the implications of COVID-19 will mean that those economies accelerate their diversification. And the growth economies such as India are projected to bounce back healthily in 2021. I think in line with what we've heard from the Bank of England in relation to the UK economy. So I think the diversification and growth trends that we've seen will continue moving forward. The region is also very young in terms of its demographics, so 40% of the population is under 40. They're very tech savvy, and the range of the population crosses the spectrum of wealth. And I think the tech savvy aspect is very supportive of insurtech and using insurtech and digital channels to provide low-cost insurance, for example, that could transform lives. There's also been tremendous public and private investment into soft and hard infrastructure. Dubai in particular has over the decades invested considerably in its environment to support business. And hand in hand with economic growth, we've seen the growth of financial services in MEASA. That economic growth that we've seen requires financing. It generates wealth that needs managing. It creates risks that need insuring. With COVID-19, I think you've also got some short-term developments that will generate activity for financial services. So on the investment banking side, restructuring, debt issuance, equity raising, and in relation to insurance, credit enhancing products, life insurance, business interruption, loss of employment, retail lines, all of those could develop further. And Dubai itself is, of course, a key strategic location in terms of trade flows, and it gives connectivity to 2.2 billion people within a 5-hour flight. So this commercial hub status has made it a natural gateway for the region and has supported the pan-regional insurance development across the multiple lines that we've seen linked to economic growth, that public and private investment that's gone into infrastructure, renewables, logistics, aviation, space, health, and education. Now, again, just touching back again on some COVID implications, and we can't be sure what the long-term implications will be, but there's been some suggestion that people will look at diversifying supply chains, perhaps a shift away from China. But we see that it's likely that others in that MEASA region will benefit if there is such a shift, such as India. And again, Dubai is well placed, within that entire region to continue to provide its capabilities. And, Dubai has done a lot in terms of providing an international environment for business, and also, putting in place the aspects that will attract and retain talents for the businesses that come to the region. So you see some of the rankings that have been achieved, both from a business perspective and also from a lifestyle perspective. And you've got 70% of Fortune 500 companies with their regional hubs in Dubai. And that sort of makeup, that business makeup, is obviously generating opportunities in insurance and other financial segments. So just turning now to the specific insurance landscape, if you like, of the GCC in particular, we can see the size of the market. I mean, it's significant, and it's been growing and forecast to grow to 36 billion by 2024. And although there are a number of regional insurance players, I think that there is a general acceptance that there is a need for more expertise, particularly around risk management, more efficiency, and more productivity. And that's, part of why we've seen the opportunities and trends that we'll touch on in a moment. And the demand for expertise and the efficiency and the increase in productivity is to make the most of the opportunities. And there is, within the GCC, you have a much lower penetration in terms of insurance than compared to emerging markets, and certainly compared, to the global penetration rate. So, huge upside in terms of where insurance, can go in the GCC. And then when you're looking at the respective sizes of the markets in the GCC, I think the UAE, they're clearly the largest. I think that's reflective of the relative sophistication of the UAE in terms of what it's done. We've mentioned, some of the aspects of Dubai and, generating that business and creating assets that require insurance. You can see, where that is. And, I think that will certainly continue. It's all maybe also reflective a little bit about how open markets are, and we can touch upon that a little bit further along. Another supporting factor is that you have an improving regulatory environment, and also you do have, given the population mix in the region, you do have mandatory insurance requirements. So right across the board, health insurance is in place. It's been in place for the UAE since 2014. And also you're seeing certain lines in the third party and professional insurance space that are required in order to conduct business. And all of that is supportive of the insurance market growth. And then when you look at reinsurance, I mean, GCC actually, stands out as being of quite a different profile in terms of cession rates compared to the global average. That's probably reflective of, capital and risk management constraints regionally, but also underlines the opportunity for those in the reinsurance space that can bring capacity and bring that risk management expertise. And then turning to the DIFC ecosystem, it was established in 2004 and is now the largest financial and professional services cluster in MEASA. It's been ranked #1 in MEASA. It's been ranked 12th globally in the latest ZEN Global Financial Centers Index. And the aim all along was to establish a center in line with international standards of law and regulation, with the business-friendly attributes. And within the DIFC, the corporate governance is very strong, and you have a common law framework with an independent regulator, the DFSA. So DIFC is a jurisdiction within a jurisdiction, if you like. It is a physical area where we have our own laws, the DIFC laws, which are closely aligned to those of England and Wales, and we have our own courts that administer and give effect to those laws. And then just turning to the insurance cluster that's developed in the DIFC in those 15 or so years, of course, the Lloyd's platform has been established for the region in the centre. It was set up in 2015, and you can, it's somewhat unique because you can actually write Lloyd's and company paper in that platform. You can also be a Lloyd's linked firm, if you like, but not have to sit on the Lloyd's platform. You can just be within the DIFC. There are 100+ insurance entities from around the globe and the region, and we have a full range of types, so the carriers, service company, cover holders, MGAs, and brokers. Now, what's interesting is actually where are the risks that are being underwritten in the DIFC? What's their origin? And you can see that actually more than 50% of risks that are written in the DIFC are non-UAE. So 32% other GCC, if you like, but 12% rest of the world. So that is actually brokers bringing global programs, to the capacity that's in the centre. You've got coverage of Africa, Levant, CIS, and Asia. So a really good mix. And for 2019, 2 billion was the gross written premium value, and that's shown again steady growth through the years. You can see the specific lines of business that are being underwritten. Obviously, health and sickness is dominant, fire and property dominant. Again, probably those more traditional lines, but we've also seen, very small base, of course, credit and liability lines, grow as well. So, credit enhancing products in particular have been utilised, given the financial services hub that's been created. And then turning to the DFSA's approach to insurance regulation, and actually, full disclosure, I was a former, or I am a former financial regulator. So for my sins, I was with the DFSA and the DIFC, and previously with FSA in the UK. But the approach taken by the DFSA is very much in line with the international standards. They're very open. You can have a dialogue, but it's a fully transparent approach, through authorization and supervision. The one element that's there, for the jurisdiction is that there is a prohibition on doing direct business in relation to UAE risks. And that's a federal law provision in the federal law that created the financial centre. And really it's there, my own view is it was there to protect, some of the direct insurers that are in the UAE. But that's there, so that, the main business segment has been reinsurance, although people do use it also for non-UAE direct risks as well. And then when you're looking at coming in, the range of activities possible in the DIFC are pretty much aligned to what you see elsewhere. So there are company carriers. We have a range of agency type characters. The brokers are there. We also have a couple of other routes, if you like. A representative office can be an appropriate first step. It is a limited type of presence where the firm is limited to generic marketing. And then, of course, there is also an unregulated approach where you're essentially providing back office functions. So you can establish a branch or a subsidiary or a standalone company. With a branch, there is no regulatory capital requirements locally, as the DFSA would look to the home state supervisor for prudential supervision. Now, just looking at the specific sort of MGA business models that we've seen and work in the DIFC, and also how you can go cross-border in GCC and MEASA. So in terms of the MGA business models, MGAs can be branches, so you can take advantage of the fact that there is no local regulatory capital requirement in those instances. It can be a specific one-to-one type agency or a platform for multiple risk carriers. The DFSA will accept start-up MGAs, and that's been a strong area in the UK. I'd like to see more coming into the DIFC. And MGAs can also provide brokerage as well as the agency underwriting, provided there are measures in place to manage conflicts of interest. And then in terms of cross-border opportunities, well, there is no formal passport across the GCC or indeed MEASA. The DFSA license does, permit activities in or from the DIFC, but they're going to be, subject to local regulations, into whatever jurisdiction you go into. Although people have adopted a hub and spoke model where the hub is the DIFC, and then there are maybe satellite offices where more engagement with those local markets is required. And around reinsurance, Saudi has a restriction around what has to be reinsured with a Saudi licensed broker. There's no such restriction with the other GCC countries, so they can be fully reinsured from the DIFC capacity. And then finally, just to give you a quick snapshot of who's in the centre, we've got a listing there of MGAs, very strong UK presence. Obviously, I mean, it's, the whole concept of the DIFC has been about exporting expertise, and there's a lot of expertise in the UK around financial services. And then we also, in relation to Lloyd's, there's a full listing of some of the service companies and Coverholders that are also in the centre. So actually, as you can see, one of the MGAs listed is K International, and we have Nick to provide his practitioner perspective on his experiences in the markets in our region. So I'll finish there and look forward to the Q&A, and I'll hand over to Nick.
Thank you very much, Ali. Oh gosh, well done. First of all, just a warm welcome to everybody. But I hope that everyone is well and keeping safe. I think it's the most important thing at this time. Now, this element of the sort of webinar may not have quite the sophistication of the DFSA. I think let's look at the village hall concept from the English village rather than anything quite super sophisticated. Anyhow, what I want to do is actually go through a little introduction about myself, with some background and contextualise that with regard to my relationship with Dubai and the region. Then a little perspective about my, I suppose, my observations from the years that I've spent within the region and operating with the DIFC. And then some very personal observations and really about the lessons that I've learned that people may be able to benefit from. And then the views of for now and possibly the future for the region. What I do want to reiterate is that these are totally my own personal opinions. They are not aligned to the MGAA or any other business that I'm associated with, so please bear that in mind. So a little bit of a quick intro about myself. I retired from Lloyd's insurance market in 2015, and I'd spent over 35 years within that market. During that time I had great opportunities to trade with operations around the world and be part of or lead teams that opened up overseas offices. And one of those offices that we opened up was actually in the DIFC. I also was part of a number of Lloyd's working parties. One of them certainly investigated where Lloyd should operate in terms of regional hubs, and I was on the working party that ultimately decided upon situating a hub within the DFSA and in Dubai. So since 2015 I've maintained an active role within the MGAA. I moved from being a director of the association, now sitting on a number of their committees. Within Dubai I have a non-executive role on the board of K International MEASA, as Ali quite rightly said, and they are a DFSA regulated entity operating really within the broker MGA model. So let's just move on to my experiences of the DIFC. Now you've heard a great deal from Ali, and you will observe really the scale of the DIFC in its current guise. Well, my relationship with them really started back in 2018, and I suppose you must remember that the DIFC really didn't come into it, the remit didn't start until 2014. So during the time I suppose I was there, we were still feeling our way in terms of learning about the offerings that the DFSA had to give to us, what the region had to give to us, and also what we're going to get from the relationships. However, even though the pressures within the DFSA at that time was, in my view, to really fuel the growth of Dubai as a financial centre, they continuously strive to find ways to make things happen, and certainly make things happen for us from a personal perspective. And one of those examples was really accommodation. When we were out there, 2008, 2009, it was a tough time, financial crisis, building was certainly under pressure in terms of it, and the DFSC at that time were actually struggling to be able to accommodate people who were considering going into that market. So what they did, rather flexibly, they allowed us to look at offices outside of the DIFC community, the gated then was, but we still saw the benefits of what the DIFC had to offer. So it just showed to me the flexibility and the ability for the DIFC to work on their feet. Now during the first 6 months of 2009 we spent a great deal of time putting together plans and looking to get our license approved. And ultimately we did so, and in fact we ended up doing a co-venture with a local partner. So one thing I certainly remember from that time is that management of the DFSA looked to create an environment that assisted us throughout that process, and certainly when we needed was able to at least steer us in the right direction. Another observation I really want to make though is the regime did not stint on the role and really the scope of their regulator, the DFSA. They spent a great deal of time and effort on securing regulators from across various jurisdictions to be part of that DFSA. They certainly didn't neglect that element of operating and creating a recognised regulatory framework for the businesses to operate in, and they were tough. Now that business secured its licence in August 2019 and actually operated for 10 years successfully until its owners were purchased by an international insurer who already actually had a presence throughout the region. My connections continue to this day with a business that was incorporated in 2016 and is successfully operating within the DFSA, and as I said, it's K International EMEA. Now, before I move on to my thoughts and observations, I really just want to reiterate one significant point, and that you've got to remember that DIFC is your landlord. If you want to operate in the region utilising Dubai as your hub, and you want to seek the benefits and the protection of the DIFC laws and being in the financial free zone, then you have to make sure there is no alternative, and you have to respect that point. So if I just move on to my observations and thoughts, and I think I'd like to categorise them a little bit more broadly. What do you really want to get from the operation if you would set up there? Why do you want to be in the region and in Dubai? Could you achieve those ambitions any quicker? And analyse some of those. Or can you even achieve the ambitions that you'd set out in the first place? And then have a little look at some of the current issues in what I would see as a very changing world. So Dubai and the region can bring your business growth opportunities, but you really need to be incredibly wise to remember the following. The region is relatively immature with regard to insurance products, and you must remember that you're operating the DIFC, you're predominantly operating as a reinsurance carrier. It is expensive, and any decision to site in the region, you should be in it for the long term. You must have a clear strategy of what you want from it. The major focus, certainly during my times, were a market that was being on property, engineering, construction, energy. And the one thing for anyone to remember is that there are a number of large players in the region who can offer large capacity. So if that's your area of expertise, then it may take you a while to actually get true traction. So what do you actually want to get from the location? Well, Dubai is marvellous to get anywhere. Its transport hubs, airports, etc. are second to none, and the air carriers, operators within the UAE are some of the best in the world. Routes to Africa, India, East, Far East, you name it, you can get anywhere. So that was a great benefit for us. Now, as long as decisions can be made on the ground, you also have the benefit that your time zone is actually close to the Asian markets, but you have to be able to make decisions. So the questions you need to have very clear in your mind are, why should we be there? What do you want from the location? Because I'll tell you now, if it is just a flag in the sand, then don't even consider it. So how do I think you possibly could get to your ambitions quicker? Well, first thing is research, research, research. Find out what the cedants are actually looking for. Ask questions of your brokers, both in London and in the region. When you get introduced to cedants, ask them questions, what they are looking for. Use the DIFC's resources. Meet local lawyers, local accountants, local auditors. Get your facts in line. Do not prejudge the region. And as I said, it is a reinsurance market you're entering. So actually, you're only as good as the cedants and your local reinsurance brokers giving you any opportunity to underwrite those risks. Let's spend a little time on culture. Embrace it and understand it. One thing I would say to you, don't think of the region as one overall region. Each country has its own maturity and has its own requirements. And many countries are now opening up their boundaries for new opportunities and to new entrants. Be aware of them. Create local partnerships. Be humble. Local partners know the markets and cultural nuances far better than you. Don't impose outside influences. Get to know what works and what people actually want. Many a business, I think, will have failed within the region and collapsed due to its own myopia. Then attitude. If you put Westerners into the office, ensure they understand the local culture. Something we used to do was give every single member of our staff a book. It was called Don't They Know It's Friday? By a gentleman by the name of Jeremy Williams, and it was an excellent introduction to the cultures of the region. Make sure your people understand and accept them. Other thing I think people should have a little look at is actually use support functions. Now, within the DIFC and outside, you can access numerous support functions. Perhaps you initially might want to actually outsource some of your functions because there are actually excellent compliance, AML, back office, company secretarial, lawyers, auditors, all of which can access and know the market and be able to do a good job for you. Pricing policy. Well, it's a hard one to overcome, but what you mustn't do is invoke a London pricing will work in the region. Flexibility for local pricing needs to be allowed, and you need to give people responsibility to underwrite. Don't be a postbox. Now, if you have you as an MGA, your capacity aligned with your ambitions, then please ensure that they know as much about the regional variances as you do being on the ground. And as I said, there are no overnight success stories. It's the long haul for all. Then talent. I mean, the region is hungry to attract and retain talented people. As Ali said, the age profile and the tech savviness is actually something to behold. So if you ensure that you use talented individuals, make sure they're part of that local office. And then if you do bring people in, don't get those people to always see it just a stepping stone in their career. Sometimes look to build an office around them and around the talent you've got locally. So let's explore possible futures. I think there are incredible underwriting pressures on the market at the moment. It doesn't matter whether you're what region you're in. And I think, speak to some people, I mean, those pressures include pressure on premium payments, extending current programs, inability to execute the risk management assessments currently, or indeed claims investigations. But, you know, as I say, I don't think they're any different anywhere else in the world. So really what I would like to do is just explore the positives. A report I recently read stated that 5 years ago, within the region, only 5 to 10% of people did online sales. That figure is now between 30 and 40%. Now, those people buying goods online are the people who also work in the cedants and brokers' offices who trade with you. They embrace e-commerce. So what does that say to me? The Dubai market in its current climate is having to adjust. It's having to be agile to accommodate and I suppose go through an automation and a digital transformation in all their processes. So based on this, if ever there's a time to abandon paper and move online, it's now. I might want to investigate some of the product ideas as well. Well, cyber liability springs to mind straight away. In fact, I've just read something called the Risk Barometer, where risk managers have now moved cyber liability up from number 14 to number 1 in terms of why they don't go to sleep at night. So that's there, and I think new industries will be undoubtedly looking for cyber liability products. Healthcare professional liabilities, compulsory medical insurance, which Ali's already alluded to. BI products, possibly looking at more pandemic wordings, etc., which include pandemic. Then contextual sales. As I said, e-commerce sales are going up. There are certainly now products that are being developed for product and delivery of those e-commerce products. Political risks. Then D&O. Boards undoubtedly may be looking at expanding their D&O coverages. And then I think there may even be opportunities for more public and private collaboration on uninsured natural catastrophes. And I hope that is actually going to happen more and more. So, in conclusion, do I see benefits in doing this in the region? And as I'm an optimist, yes, but get it right. Have the right products. Don't just be a capacity player. Get local partnerships in place. Support, possibly, in your initial times, somebody who's already there, who's already actually set up their infrastructure, and you'll learn more about it. So support those people. Get your capacity on side. They certainly need to be part of the process moving forward. And you're in this for the long haul. It is not a short-term ride. So create costs and efficiency gains now, thus enhance the margins at day one of your operation and be smarter than your competition. So be agile, use technology, strive to change the old processes, and I can't see any reason why people will not succeed within the region. So thank you. Then I believe it's Q&A time.
Thank you very much, Nicholas and Ali, for that. That was really insightful. Apologies for not being able to share the poll. I'm not quite sure why, but I will share the results afterwards along with the slides and the recording. We've had a few questions come in, but just before I kick off with those, just a reminder, if you do have any questions, please click on the chat button on your option panel and type it into the window that appears. It will come through to me and I'll raise that when they come in. The first question that came in is probably one for yourself, Ali, and it's in two parts. Is the captive insurance and reinsurance market growing in the DIFC, and how many captives are established there?
Yeah, thank you, Ben. Yeah, I mean, that's, you know, it's an interesting question. I mean, you know, you would say that potentially there should be a good deal of interest. I have to say it's still a small segment of the insurance community. So you know, it's going to be less than, you know, double figures. I'm not quite sure, you know, from where I sit, why it hasn't. I know that Marsh do you know, provide captive management. I think that there's, you know, potential to utilise the, you know, the jurisdiction more for captive business, and I'd be open to, you know, to engaging with the questioner on, you know, what aspects of you know, the captive market, you know, the DIFC isn't addressing, so we can make it more attractive. But so it's small, but we'd love it to, you know, to increase in substance.
Okay, maybe one we can pick up after the webinar. Ali, we heard from Nick in terms of some of the main challenges for insurance companies setting up in the region. Did you have any kind of thoughts on that from your own perspective?
I think a lot of what Nick said certainly chimed, you know, with my thoughts. I do think that, you know, people, you know, if you're looking at the region, really need to have an eye on costs, so that the business model has time to establish and work. I think that, you know, places like Dubai, they're not a hardship posting. You don't necessarily have to overpay for talent, and I think that, you know, that, you know, for, you know, what we've seen over the period of time is where people have struggled has been where their cost base is just simply too high, and most of that is related to, you know, to people costs. So, you know, as Nick said, you know, plan properly and be aware of that. So, you know, I think that's you know, that's the item I would add to Nick's comments.
Okay, thank you. Nick, you touched on talent, and obviously Ali's just raised that just now. What advice would you give to any individuals who wish to move their career internationally and maybe look at Dubai as an option? What kind of advice would you give to someone in their shoes?
Well, consider it. I mean, it's as Ali said, it is not a hardship place to go and live. It's actually a very nice place to live. You have to actually understand, like I say, the culture and understand the climate. That's also incredibly challenging on occasion. But, you know, they make it very, very nice for people to live. Families live very well. It's a safe place to live. So if someone is talented, and if there are people who want to consider growing their career by spending time there, then seek benefit of it. I mean, it's we were there in the early days, and when we opened up, we certainly did put some individuals through there, and some of those individuals are now running Lloyd syndicates. So they have seen benefit of being within that community and within, and there are challenges, undoubtedly for families and also for business. You get through those, you can get through most things.
Ali, is there anything you'd like to add on that?
No, I think you know, Nick is absolutely right, and I mean, I also think, you know, it would be great to get some additional or new talent. You know, one of the things that we see is the market, and one of the reasons why the costs are higher is that the market seems to compete with, with itself in the DIFC. So actually, if you can bring in, new talent that's perhaps not in the DIFC, then, it's a win-win in terms of, your cost base and also, getting the right people.
Excellent. Okay. Another question that's come in. Are there any MGA incubator service providers present in the DIFC? Those providing a full plug-and-play service? Maybe one for you, Ali?
Yeah, so that very good point. And there isn't anyone currently, but we are very open to having discussions around how that model can work within our regulatory regime. So I have had discussions with platforms, out of the UK that incubate, startup or small MGAs, and we're really keen to work with those offering those types of services and the DFSA, the regulator, to see how we can accommodate that. But yeah, that's something that we're really keen to engage on.
Okay, sounds quite open then. Excellent. Potentially one again for you, Ali. What are the regulatory priorities for the DFSA in relation to insurance?
Yeah, I think as Nick mentioned, I think there are common short-term issues that various jurisdictions and regulators are looking at currently: business continuity, liquidity, even solvency of businesses. But I think longer term, and the DFSA is mindful of the standards set by the IAIS and what other regulators are doing. So they'll sort of not in an unreasonable manner, but they will continue to evolve their regime. But I think one of the aspects that they will be looking at is, and that's to Nick's point about the maturity of the market, is around premiums and premium collection and the systems and controls around that to ensure timely payments of premiums. So that's one specific area that they will be looking at.
Excellent. Okay, thank you very much. That's all the questions that we've had in, unless anyone sends through another in the next kind of 5 or 10 seconds. Just want to thank our speakers today, Ali and Nicholas, for providing their insights into the Dubai area. It's not always easy to present on a webinar, and I think you've done that very well.
Thank you.
As I said before, I will share the poll results after the webinar. Apologies for that. I'm not quite sure why the system wasn't allowing me to share that. But I'd like to also take this opportunity to thank all the people who dialed in today. We do have a number of webinars coming up in the next few weeks, so please look out for those, for any of those may be interested. And once again, thank you very much to Ali and Nicholas for presenting today for us.
Thank you very much. Thank you.
Bye, everybody.
Bye.
Bye-bye.